The evolution of Bitcoin in 2023, geopolitical shifts, institutional adoption, and market dynamics. Bitcoin has emerged as a pivotal force in global finance, driven by geopolitical tensions, institutional innovation, and evolving market dynamics. As the world grapples with economic uncertainty and sanctions regimes, cryptocurrencies like Bitcoin are redefining financial sovereignty. This article explores how geopolitical strategies, regulatory shifts, and market forces are shaping Bitcoin's trajectory. 1. Geopolitical shifts, sanctions evasion and Russian adoption. Amid escalating Western sanctions against Russia over the Ukraine conflict, Bitcoin has become a critical tool for circumventing financial restrictions. The Bank of Russia recently permitted wealthy individuals to trade cryptocurrencies, signaling recognition of Bitcoin's role in preserving economic autonomy. This move underscores Bitcoin's utility as a hedge against capital controls, enabling both institutions and individuals to bypass traditional banking systems. Key implications. Sanctions evasion. Russian entities are increasingly using crypto to circumvent SWIFT exclusion and USD-denominated transactions. Global resilience. The adoption highlights Bitcoin's potential as a decentralized alternative to fiat currencies in unstable regimes. 2. U.S. Strategic Reserve Initiatives. Trump's digital Fort Knox. U.S. policymakers are also reimagining Bitcoin's role, with proposals for a national cryptocurrency reserve gaining traction. Former President Donald Trump has advocated for a digital Fort Knox, positioning the U.S. to compete in the digital asset arena while maintaining financial dominance. Legislative landscape. Lummis-Gillibrand Bill, a bipartisan effort to clarify crypto regulation, potentially easing institutional adoption. Donald's proposal focuses on leveraging Bitcoin as a reserve asset, though funding mechanisms remain contentious due to inflation concerns and Fed opposition. These initiatives reflect a broader recognition of Bitcoin's role in global finance but face hurdles from traditional financial institutions wary of systemic disruption. 3. Institutional investment, REX shares and the democratization of access. Institutional investors are accelerating their crypto exposure, driven by products like REX Shares Max ETF, which offers exposure to Bitcoin through convertible bonds with MicroStrategy, a major BTC holder. This innovation lowers barriers for retail investors while institutionalizing risk management. Market shifts. Liquidations and volatility. 21 shares liquidated crypto ETFs due to outflows, underscoring market volatility but also signaling opportunities in selective products. Meme coins inclusion. REX's integration of meme coins, e.g., Dogecoin, highlights the growing acceptance of altcoins alongside Bitcoin, despite their speculative nature. 4. Price dynamics, resilience amid turbulence. Bitcoin has weathered a 22% price drop from its recent peak but remains resilient due to macroeconomic hedging demand and anticipation of the April 2024 halving event, which will reduce Bitcoin's issuance by 50%. Analysts view this dip as a shakeout, cleansing speculative excess ahead of long-term growth. BTC versus XRP resilience. Bitcoin's scarcity model, finite supply, contrasts with XRP's algorithmic inflation, making it the preferred hedge during crises. This dynamic reinforces its status as digital gold. 5. Technical indicators, current momentum and resistance levels. At $85,000, Bitcoin faces critical resistance at $86,700, a psychological threshold tied to 2021 highs. A breach could catalyze a rally toward $100,000, while a pullback might test support at $75,000. Short-term volatility persists due to macroeconomic uncertainty and choppy investor sentiment. 6. Mining sector challenges, debt and hash rate pressures. The mining sector faces headwinds as $4.6 billion in debt and declining hash price, mining revenue per hash, strain profitability. Major players like Kango and Riot have delayed projects, yet CleanSpark's expansion to 11 units demonstrates selective optimism. This duality reflects the sector's need for cost-cutting innovation. 7. Regulatory scrutiny, ethical concerns and compliance. The industry faces ethical challenges, exemplified by David Sachs, CEO of Autonomous, abrupt divestment from Ripple, citing regulatory risks. Such moves underscore the importance of compliance as regulators tighten oversight, particularly after Lummis Gillibrand's proposed framework. 8. Expert outlook, Bitcoin versus gold. Fundstrat's Tom Lee forecasts Bitcoin to outperform gold by 2025, driven by AI-driven efficiencies in mining and institutional adoption. While gold's market cap is $13T versus Bitcoin's $0.9T, Lee argues that crypto's technology advantage and decentralized nature position it for dominance. Conclusion: a decentralized future. Bitcoin's journey reflects its dual role as a geopolitical tool and financial innovation. As institutions institutionalize access, via ETFs, and miners navigate debt, the network's resilience hinges on macroeconomic trends and regulatory clarity. With the halving near, Bitcoin stands at a pivotal juncture. Its next move could redefine global finance for decades to come. Key takeaways. Geopolitical adoption is reshaping Bitcoin's utility beyond borders. Institutional products are bridging retail and institutional markets. Technical and fundamental factors set the stage for volatile but transformative growth ahead. Whether as a hedge, reserve asset, or speculative vehicle, Bitcoin remains central to the future of finance, and its next chapter begins now.